Welcome back to my channel, ladies and gentlemen. I am so delighted to welcome you once again to my channel. In today's video, I am going to be showing you how I made over $5,000 today using a simple support and resistance trading strategy. Like I told you in my previous videos, support and resistance still remains the foundation of all technical analysis. And if you want to master forex trading, if you want to understand the power of forex trading, you need to understand support and resistance. In other words, we call it supply and demand. You need to understand what actually moves the market, right? So that you will know when to enter a trade and when to stay away from a trade. Forex trading is a business of probability. It is not a get rich quick business. It's a business of skill. It's a business of patience. It's a business of understanding. You need to understand how the market flows. You need to understand how the market moves so that you will be able to play along with the market, right? So I have been monitoring SAUSD, that is gold. I've been monitoring this pair for a long time, and I think I understand how this particular pair moves. Like I told you, I always trade gold, and gold has been my major pair since I started trading the forex market. So in today's video, I'm going to show you a simple way on how you can trade support and resistance level with minimal risk. That is to say, you are going to risk small amount of money to make huge amount of money, right? Risk free. That is to say, you are going to risk at least 20 pips to make over 100 or 150 pips. So my advice to you guys is to make sure that you watch this video from the beginning to the end. Don't skip any. Make sure you watch this video from the beginning to the end so that you will understand everything about this video. So like I told you, support and resistance is one of the best strategy that you can use to make money in the forex market, right? Why? Because the market moves in cycle, right? The market moves in cycle. It rotates. Sometimes the market will be trending up, sometimes the market will be trending down, and sometimes the market will be ranging, and that is why we call the market structure. So first, you need to understand the market structure. Is the market going up, going down, or ranging? So once you understand a market structure, before you can think of looking at an area of value. So an area of value has to do with support and resistance level. So once you are able to identify key levels of support and resistance level, you will be able to know where to place a trade. And how do you place a trade? You wait for what? Entry trigger. That is where candlestick pattern comes in. You need to wait for something like a rejection candlestick pattern before you can confirm that that level is not going to be broken, right? So that is why I always say that you need to take a time to master support and resistance level so that you can be able to make money consistently in the forex market. So I'm going to dive straight to the chart, and I'm going to show you the trade that I took today and how I analyze the market before I place my trade. So let's head straight to the screen. So right now we are on the screen. Like I said, I trade gold. So this is where I do my technical analysis. This is Trading View. Like I said, Trading View is one of the best platforms where you can do your technical analysis before you can go to your MT4 and MT5 to place your trade, right? So with the Trading View, you can be able to analyze the market, know what the market is doing, know how the market is behaving before you can act, right? So like I always say, patience is very important. You need to exercise patience and wait for your entry, because this business is all about sniper. You need to wait for the price to come to you. You don't need to chase the price. You need to wait for the price to come to you. So once you do your technical analysis on the trading view and you have mapped out your levels, you just simply relax, monitor the chart once in a while and wait patiently for the price to come to your area of value before you can take a trade. So now when I woke up today, I look at the chart, right? This is 5-minute time frame. So I woke up today in the morning, I look at the chart to know how the chart was doing, right? To know what the chart was doing. Where is this stuff? Okay, all right. So I just want to show you something. Today is 30th January 2024. So the market opened by midnight, right? Okay, this is where the market opened, by midnight. That is 1 o'clock a.m. midnight. That was when the market opened, somewhere here, right? This is where the market opened. So now this is where the market opened, right? So now what I did was this. First, I went to the higher time frame to know the directional movement of the market, because I want to understand the market structure first. Let me know what I'm doing, right? I want to know whether if the market is trending or ranging. So what I did was let me go to the higher time frame and know what the market is doing. So I went to the daily time frame. So when I went to the daily time frame, what I discovered was the market was trending up, right? The market was clearly in an uptrend, right? So you can clearly see the market is making higher high and higher low, higher high and higher low, higher high and higher low, right? So I understand that at the higher time frame, like the daily time frame, the market is clearly in a trend, is trending up, right? So now let's say, okay, fine, now the market is trending up. Let me go down again to the 4-hour time frame and see what the market is doing at the 4-hour time frame. But before then, I need to map out the key levels for the daily time frame before I go to the 4-hour time frame. So what I did, I brought out my horizontal line and map out the key level. This is what we call key level, right? This is a key level for you to see that the market is clearly in an uptrend, right? So this was formerly a resistance level where price couldn't break through. So you can see that price went down, couldn't break through it, went down again, couldn't break through it, went down again, then finally broke above it. The same thing applicable here. Price couldn't break through it, went down, went up again, couldn't break through it, went down, then broke above it, came back again, broke above it, then came back again, went up again, and then came down. So if you watch, see that this level is an area of value, is purely a resistance level, right? So because the market tested it 1, 2, 3 before it finally broke above it. So after the market broke above it, the market did what? The market come back to test the level, right? The market did what? The market come back again to test the level here, and after that the market continue going up. So this tells you that the market is clearly in an uptrend. Now I have confirmed that the market is slowly heading up, right? It's in a slow uptrend, right? It's in a weak trend. So the trend is not that strong, it's in a weak trend, but clearly the market is going up. So now I have confirmed. So now that I've confirmed that the market is in an uptrend, I now decided to go to the 4-hour time frame. So I went straight to the 4-hour time frame to understand the market very well. So now this is the 4-hour time frame. You can see now, you can see the clear picture now. So this is the support level from the daily time frame, the support level from the daily time frame, and this is when I woke up, right? This is when I woke up. So you can see the line is still there. This is the time I woke up today, 30th January 2024. So this is the time I woke up. You can see the date. You can see the date, 30th January. So now, looking at the 4-hour time frame, right? I can clearly say that the market is ranging at a 4-hour time frame. The market is ranging. The market doesn't have any directional movement in the 4-hour time frame because the market goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. So this is the highest level that the market went to, right? This is because this one was a rejection, right? So this is the highest level that the market went to. This is the highest level that the market went to, right? So this wig is a rejection, right? This one is, I would say this one is caused by news. That is why you see this flip. So this one is caused by news. That was why I saw this flip. So this is the highest of the market, the highest level of the market, which I already mapped. The highest level of the market. Good. Now I have mapped out the highest level of the market, right? Now I've mapped out the lows of the market. Now, and I look clearly and I see that since the market got to this level, the market has not been able to return back to this level, right? The market has not been able to return back to this level. Instead, the market is just consolidating at the 4-hour time frame. Now, when I looked at the 4-hour time frame, I saw so many resistance level, right? I saw so many resistance level at the 4-hour time frame. I saw a resistance level with so many touches. So what I did now is I brought my tool again and I mapped the level, right? So this is the level that I saw, the first level that I saw that was holding onto the price. This was the first level that I saw that was holding onto the price. So when I saw this level, right, I knew that this is a strong level because the market tested this level 1, 2, 3, 4, 5, 6, right? And then what I did was I waited for the price to come back to this level for me to take action, because I knew that the market tested it 1, 2, 3, 4, 5, 6, and 7, right? So the market tested it 7 times. So I said this is a strong resistance level. I said, okay, fine, let me wait for the market to come back to this level for me to take action, right? So what I did is I exercised patience. When I woke up, I waited for the market, and when the market got to this resistance level, right, I immediately went straight to the lower time frame, right? I went straight to the lower time frame. That is, I went to the 5-minute time frame, right? I went straight to the 5-minute time frame. This is a 5-minute time frame. All right. So I went straight to the 5-minute time frame. So this is it. This is the level, because I've already drawn the level. This is the level. So I went straight to the 5-minute time frame and I saw that the market is approaching back to this level. This is the level that I told you. Let's go back to the 4-hour time frame. Right. So this is the 4-hour time frame. We are back to the 4-hour time frame. Okay, so you can clearly see that I've already mapped out the level that the market has been respecting since yesterday. The market has been respecting this level since yesterday, because if you watch, the market couldn't break through it, got rejected, came back again, got rejected, came back, got rejected, came back, got rejected, came back, got rejected, came back, got rejected. So I now said to myself, this is a strong resistance level. So I had to map the level with a horizontal line, right? So after marking these levels, I can't take a sell trade at the higher time frame, because you know this swing, this movement, this thing is a movement at the lower time frame. This rejection, this wig you are seeing now is a movement at a lower time frame, right? So I said, no, I can't take a trade here. Let me exercise patience and go to the lower time frame and wait for what? And wait for a crossover, right? So what I did was I now went straight to the lower time frame. That is the 5-minute time frame. So I went straight to the 5-minute time frame. So this is the 5-minute time frame. So I went straight to the 5-minute time frame and I saw that the price has gotten to the level that I was talking about. So this is the level, right? So this is the time I woke up. You can see this is the time I woke up in the morning. That is 30th January. This is the time I woke up. So I waited patiently for the price to come to the level. So you can clearly see that the price has gotten to the level. But I cannot take a trade at this level, right? I needed to wait for what? A rejection. I needed a confirmation that this price cannot be broken. I wanted to confirm that this is a strong resistance level, right? So as the price broke above this level, because I know that when the price breaks above it, definitely it will be rejected, right? So when the price broke above it, I exercised patience and said, okay, let me wait for crossover, right? Let me wait for a crossover before I can take action. So now when the price now broke above it, let me increase it so that you can understand what I'm talking about. So now you can clearly see that the price broke above it. Now you can see what I'm talking about. You can see the rejection. This is what we call shooting star. You can see the rejection. See the long wick. The price broke above it, got rejected. So I wanted to see so many rejection before I can take action. So the price got rejected, came back again, got rejected, got rejected, got rejected. Honestly, there were so many rejection. There were so many rejection at this level. So, but I wanted to trade based on my normal moving average crossover. You know, I'm a fan of moving average crossover. I love moving average crossover so much. So I said, okay, fine, let me wait for the moving average crossover for me to be able to take my trade. So I waited for the moving average crossover to happen for me to take my trade. So this is where the moving average crossover happened. You can clearly see that the 5 EMA crossed below the 20 EMA. That is, this is a blue line crossed below this black line. So I have confirmed that the crossover has happened, right? So I wanted for a pullback, let the price make a pullback to the 20 EMA for me to take my sell trade. So after the crossover, the price now makes a pullback to the 20 EMA. So this is the exact point I took my sell trade. So this is the exact point where I took my sell trade, somewhere here. This is where I took my sell trade, right? And my stop loss was just 20 pips. So I took my sell trade at 36.43. So my stop loss was just 20 pips. That is 20.38.43. 20.38.43. All right. So this was my stop loss, right? So now, when I took this sell trade, I knew fully well that the market is in an uptrend at a higher time frame, which is the daily time frame. I knew fully well that the market is in a uptrend, and I know that the market will tend to receive support from the 1 hour time frame, right? Because if you look at the 1 hour time frame, you can clearly see that the market is going up. So if you go straight to the 1 hour time frame now, you can see that the market is still going up, right? Let's just zoom out the chart. All right, so this is the 1 hour time frame. All right, so this is the 1 hour time frame, because I normally play with so many time frame when I'm trading. I don't use one time frame. My main time frame is 15-minute time frame, but I do play with so many time frame to get the directional movement of the market. At the daily time frame, it is confirmed that the market is in a slow uptrend. The market is going up, but in a slow motion, right? So now, if you look at the 1 hour time frame, you can clearly see that the 1 hour time frame is also going up. The 1 hour time frame and the daily time frame are heading up. It's only the 4 hour time frame that is just ranging. So now I've seen in the daily time frame that the market is going up, and now I've seen at the 1 hour time frame that the market is also going up. So what I did was I took out my trend line to really confirm that the market is clearly going up. So I marked the trend line. I used the trend line to confirm that the market is clearly going up. I'll need that confirmation that the market is clearly. So now my trend line has confirmed to me that the market is going up. You can clearly see that my trend line has confirmed to me now that the market is going up. So now I knew that if the market goes down, it will tend to receive support from the 20 EMA at the 1 hour time frame, right? Because this is where I took my sell trade, right? So I know that if the price goes down, definitely the price will tend to receive support from the 20 moving average, which is this black line. So that was when I knew that I need to place my take profit before price gets to that 20 EMA. So I did what? I now looked at the level. I use this sign. To look at the level where the price can tend to receive support. So it was 20.32, right? So once I confirm the level, because that is where I believe that the market will tend to receive support. So once I confirmed the level, I now went back to my 15-minute time frame for me to be able to place my take profit. So I went back to the 5-minute time frame so that I can be able to take my profit. So I went back to the 5-minute time frame. All right, so this is the 5-minute time frame. So this is where I entered my trade. So this was my stop loss, which is 20 pips, right? So I entered at 36 and my stop loss was at 38. So now I've confirmed that 2032 is where the price will tend to receive support because of the 20 EMA at the 1 hour time frame. So I simply did what? I simply placed my take profit at the 32 point, because that is where I knew the price would tend to receive support. So I placed my take profit at 32, somewhere here. So it was just 40 pips that I targeted. So I targeted 40 pips because I normally place 2 trades. Like I told you, first trade I'm going to have a fixed target, while the second one I don't have fixed target. I normally leave it until there's a crossover before I can close it. So that is how I normally place my trade. I always place 2 trades. One has a fixed target and the other one is just like that. What I will do is that once the first target is taken, I'll break even. So that is how I do my trading. So now I've targeted my first take profit at 32, right, where I believe the price will tend to receive support because of the moving average at the 1 hour time frame, the 20 EMA, which I saw previously that price tend to receive support from the 20 EMA at the 1 hour time frame. If you go back to the 1 hour time frame now, you will see that price tend to receive support at the 20 EMA. So let's zoom little, so you can clearly see it. Whenever price comes close to the 20 EMA, it got rejected. Whenever price comes to the 20 EMA, it got rejected. So based on the price action, I now know that this 20 EMA is going to be an obstacle for me, because I know that price might not be able to break below this 20 EMA. Rather, even if it break below, it will get rejected. So this 20 EMA became an obstacle for me. That is why I said, okay, fine, let me just take profit, my first take profit, before price gets to the 20 EMA. But if price eventually breaks below it and continue, I still have my second take profit, which I normally I don't normally have a fixed take profit for that one. I wait for crossover for me to take my profit. So now back to the 5-minute time frame. So back to the 5 minutes. So what happened now? The price now rallied down and then smash my first take profit, which is about 40 pips, right? So I risked 20 pips and I got 40 pips. So when the price hit my first take profit, I immediately broke even, right? I immediately broke even. So I took my stop loss to my entry, right in front of my entry, so that if the price eventually goes against me, it will hit my break even and I won't lose. After all, I've made profit already. So what happened is this: price now reversed after hitting my take profit, went down a little and then got rejected and then started heading up, because as you can see, it's clearly uptrend at the higher time frame. So the price now went up, hit my break even, and to my greatest surprise, price broke above the resistance level, right? So when the price broke above the resistance level and started to head up, I rushed back to the 4-hour time frame again, because I know that that first resistance level has been invalidated because price has broken above it. Remember, the 4-hour time frame is ranging, so that is why I normally go to the 4-hour time frame to pinpoint my area of value, which is support and resistance level, to know the level that is holding at the 4-hour time frame. So when this level was broken, this level, this 36 level was broken. Let me place this so that you understand what I'm talking about. So when this 36 level was broken, look at how the price broke above it. I went back again to the 4-hour time frame to know the next available resistance level, right? To know the next available resistance level. So now this is the resistance level that I saw where I took my trade, and the trade went down, right? The trade went down. You can see the trade went down before it got rejected. So now this is 4-hour time frame. So now that the price is going back up, and what happened? The price now broke above this resistance level and started going up, right? So I now say, okay, where is the next available resistance level? So I now check and I saw that the next available resistance level is this, and this. So this is the next available resistance level. This was what came to my mind. This is the next available resistance level. What the market does is that once the market breaks above a particular resistance level, right, it will tend to receive it will tend to travel to the next resistance level and it will not be broken, because the market has broken the first resistance level, but the market could not break the second one. Why? Because the market is not in a strong uptrend at the higher time frame. The market is in an uptrend, but not at a strong one. It's in a slow uptrend. Why? At the 4-hour time frame, the market is just ranging. So I knew that the market will definitely tend to find support or resistance at this 4-hour time frame. So that was why I was making use of this 4-hour time frame for my key levels. So now, when the price broke above this resistance level, I tend to look for the next available resistance level for me to monitor very well. So I discovered that this was the next available resistance level, and I immediately brought out my horizontal line and I marked it. So I marked to make sure that it touches the 3, confirm. So 1, 2, 3, 4. So I have 1, 2, 3, 4. So I clearly say that this is clearly a resistance level, that if price comes back to this level, right? If price gets to this level, I'm not going to rush and place my trade. I will still go back to the lower time frame and watch for what? Crossover. So I exercise patience and I watch the price going up. And when the price got to this level, right? The price got to this level and broke above it a little. And what happened? The price began to range, right? It started to delay. So when I saw the delay, I went to the lower time frame to know what is happening. So I went down to the lower time frame. I went first to the 1 minute time frame to know what is happening. So I went to the 1 minute time frame to know what is actually happening at that level. So now this is the 1 minute time frame. I want you to understand what I'm talking about. This is the 1 minute time frame. I said, let me go to the 1 minute time frame. I see why is this price delaying? Why is it wasting time? So I decided to go to the 1 minute time frame. So now I looked at the 1 minute time frame. And I saw there were so many rejection at the 1 minute time frame. If you watch, you see that the price is not able to go any further. So whenever the price goes up, it got rejected, goes up, got rejected, goes up, got rejected, goes up, got rejected. So this was what the price was doing. And I said, honestly, this level is going to hold. So I waited for a crossover at the 1 minute time frame for me to place my sell trade, and this is where the crossover finally happened. So when I saw this long red candle, right, this is the candlestick that caused the crossover. So when I saw this long red candlestick and I saw the crossover, I immediately placed my sell trade at this level. So I placed my sell trade when the crossover happened. Right, this is the candlestick that caused the crossover. So I placed my sell trade, and my stop loss was the same 20 pips. So 20 pips should be 45.39, right? So somewhere here was my stop loss, and this was my entry. I entered at 20.43 and my stop loss was at 20.45, right? So my take profits as usual was 40 pips. My first take profit was 40 pips, and my second take profit was hold. Now the price now began to rally down, right? So my first take profit was 40 pips, which is which is 39. 39 is my first take profit, right? So this was my first take profit, 39. So when the price came down here and smashed my first take profit, I broke even. So I took my stop loss to my entry somewhere here, so if the price goes against me, it will hit my break even and I will not lose. So once I've taken my take profit, I had to relax, because I've already broken even. So if the price goes back, it will hit my break even and I will not lose. So I now went back again to the higher time frame. To see what the price is doing. So I went to the 15-minute time frame to see how the price is doing, right? So this was where I entered my trade. So this is where I took my first take profit. Okay. So my first take profit was at 39. So I took my first take profit somewhere here. So this is where I took my first take profit, and I entered my price at 43. So this is where I entered the price at 43, and my stop loss was at 45, right? So I took my first take profit here, and that was when I broke even. So I now waited for the price to cross above the moving average at the 15-minute time frame, right? So the price now rallied down all the way to this point, right? And still makes a pullback, and after that the price now rallied down again, right? So now the price is now going back again. You can clearly see that the price is now making rejection. So I'm not going to close my trade, right? I'm going to hold on to this trade until price cross above this 20 EMA. That is when I'm going to close my trade. So I'm still holding onto my trade, waiting for price to cross above this 20 EMA for me to close my trade. So if you watch, you see that I've already gotten my first take profit at the first trade, which after the price broke even, and now I've gotten my first take profit again at the second trade, and this time around I'm waiting for a crossover. So I decided to share this video for you guys to understand the power of support and resistance level. So very soon I'm going to close my trade because it looks like the price might break above the 20 EMA at the 15-minute time frame, because once the price breaks above it, that is when I'm going to close my trade. So that is all I have for you guys. My advice to you guys is to go to your demo account and backtest this support and resistance trading strategy. Backtest it very well. Go to a higher time frame. If you're a day trader like me, you can go to the 4-hour time frame to look for available support and resistance level. Once you are able to identify support and resistance level at the 4-hour time frame, then you can now scale down to the 15-minute time frame or the 5-minute time frame and wait for your entry. So when the price gets to a resistance level at the 4-hour time frame, you can then go to the 5-minute time frame or the 15-minute time frame and wait for what? Rejection. You need to see so many rejection candle to confirm that that level is holding. That level cannot be broken for you to be able to place your trade. So this is how I trade the Forex market profitably. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Bye.